Welcome to the Pipnotic Symposium for the 19th of September 2019. Okay, so today we're going to have a look at ways to identify turning points, which can be done pretty easily just by focusing on a price chart of any security. So what we need to look for, we need to look for a pretty clear pattern. So you have price here that's moving higher and lower, higher and lower, higher and then lower, and so on. What you need to do is you need to look for like a nice clear swing. And here we have a nice clear swing from here to here. So now you have to ask yourself the question, what happened last time price came to this price level for this security? Well, last time it managed to move higher above the highs and away from something in here. This is probably a micro area of demand just down here, which essentially is what attracted buyers into the market and caused price to move higher. So what we need to do is we need to identify these. And there's also something that is important, which is also the quality of these areas. And you can see the price has been here once, twice, and this is the third time. So on a third attempt, I don't think that that's going to be a very good trade. And so what we need to do, we need to focus on the ones where price has been back only one time. Okay, so we have another one here. Here we have black space. Here we have fresh demand for the security just down here. So on this price chart, I would buy here. I wouldn't buy here. Why? Because of this. I wouldn't buy here. Why? Because price has been here and here. But this is just a very clear move from below and higher. Okay, so this is the area that's interesting to us, which we can see here. What we don't want to see is stuff like this, where price moves up, goes up, comes back, does this, and then leaves. Why? Because this sideways price movement is the market consuming liquidity that we need in order to support our position. Okay, so this is not good. What we need to see is this. Okay, so sharp pushes away, black space between where price currently is and where we want to enter, which is down here. Okay, so that's the first important point. The second important point is if we have opposing, let's say, supply here, so price came down, did something, came down, and now it's moving higher. We want price to reach demand before it reaches supply. Why? Because when price comes up to this price level here, this is an attractive price to sell at. The sellers will enter the market, and this will be potentially overwhelming for our little area of bullish liquidity here, which we need in order to move higher and above. So this would be a nice place to entry if price did not react here yet, depending on what we have up here. Okay, because this is opposing supply. We want the size of this to be 3 times the size. So our stop is here, our entry. I want the target to be 3 times the size of this from here to here. Okay, here. And if price has already been there, well, then the move has already happened. Okay, so we want to make sure that price has not been here. So in this example, we want to see something like this. Price to come down before, so we want black space here. We want to move up here, and then we want to get out of the trade once price has reached this opposing area of supply. Good, well, I'll leave it at that. Any questions, please send them in. Thanks for watching.